We're plus 30. Jim Bianco of Bianco Research saying the explosion of retail investing has been years in the making. He writes the following: this paradigm shift in investing isn't going away. Even if an overvalued equity market suffers a big correction, the playing field is changing. Jim joins us now for more. Jim, I've been looking forward to this conversation this morning, sir. Great to catch up. How's it changed, and how long will it change?
Oh, I think it's changed. It's changed for a long time. Look, the retail investor has every tool and the availability that every one of your guests, including me, has. They've got free trading. They've got fractional shares. They've got all the information that they need. They've got forums that they could discuss ideas with. There's very little an institutional investor can bring to the table that a retail investor doesn't have, except outperformance. And unfortunately, many of those institutional investors just don't bring that to the table. So the retail investor has taken it upon himself to start investing their own money. And since the spring, they have largely been winning in almost every trade, whether it was buying the airlines after Buffett got out of them, or what we saw with the work from home stocks over the summer, and now going after the short sellers right now. They've got just one win after another, and it's been quite remarkable.
Size. Is size important here, Jim? Does it matter as much as it used to?
It depends on what you mean by size. If you mean that all of these little traders that might have a couple of $100, if hundreds of thousands of them get together at the same time and they buy into the options market, they can have the size bigger than the entire hedge fund industry. And that's what we're finding out right now. If you're talking about, do you need size to invest in this? Well, with fractional shares, a couple of $100 is all you need to get involved with this. Again, multiplied by hundreds of thousands of people all doing the same thing, and it becomes very significant.
How important do you think the appetite, the proliferation of access to short-dated call options has been in the last few years, Jim?
Oh, I think that the options market has been their way to really play this in a big way, and they've been jumping on it in a big way. And not only that, they've been understanding that the options market has been their way to go about it. Look, let's talk real quick about GameStop. I think it's getting a bad rap. If you go on the Reddit boards, and I've been on there for a while, they understood that there was a mistake being made by the big hedge funds by going over 100% short the outstanding float in GameStop. They saw a vulnerability. I don't know why other hedge funds didn't attack this, but retail banded together and they attacked this, as they should have. The SEC should be investigating the hedge funds for allowing this vulnerability to be in existence in the first place, not the people that took advantage of it. That's capitalism. What's happened to these big hedge funds that are losing money, that's where the investigation needs to be.
So, Jim, you're touching on something a little bit controversial. Do you think the activities that we're really starting to focus on, particularly in the last week or so, will actually force this market to improve price discovery in an almost perverse, counterintuitive way?
Oh, I think it has. I think it has. When the biggest way it has is the institutional investor has not been fulfilling the need. After the pandemic, in the reopening, or after the reopening, the work from home stocks, the disruptive technology stocks have been the place to be. The traditional investment manager who's debating whether or not they should be overweight or underweight financials is not playing in that. The traditional ETF that buys a big broad-based index is not playing in that. The individual investor recognizing work from home disruptive technologies is the place to be. Think Tesla. They said, look, if you're not going to give me what I want, I'm going to do it myself. And they have. And in the case of Tesla, they've also turned out to be a big winner as well. So I think that the institutional community has to realize, what is it that their customer, the retail investor, wants? They're not giving it to them. So that customer is moving on and trying to find it on their own. And now that customer is getting sophisticated enough to find vulnerabilities in the institutional community, like with these short sellers, and taking advantage of that too. Why haven't institutional investors been taking advantage of it before retail jumped on it?
So here's the story for me, Jim, and you and I both know we cross paths with a lot of the same people. There are some really smart institutional investors who just blow your mind, and you have to sit back and just listen for hours on end as they talk to you. And then you realize pretty quickly, it's pretty obvious, not all institutional investors are created equal, and likewise with retail. Frustration of mine over the last couple of days, Jim, and I wonder if you share it, it's just the snobbery, just in terms of the conversation that you hear around this big debate that's taking place at the moment.
Oh, yes, it's been sickening to listen to this that the retail investor is going to lose, that they don't know what they're doing. Even the word sophisticated investor, which is supposed to be a put down on the retail investor as well, too. Look, the sophisticated investor and the institutional investor is the one that's got to ask the questions. How did they miss this? How did they allow this to happen right under their nose? And why did it take a Reddit forum to expose their mistakes? And so, I've really been, upset by the way that everybody's been putting down what's been happening with the retail investor. They're the ones that have had it right so far. Now, yeah, maybe it ends badly in the future, and it very well could. But right now, the lesson to be learned is that there is a problem in the institutional community, and the retail investor is not pleased with it. And that's why we're seeing this democratization, and they're moving on to doing it on their own. And again, they've got free commissions, they've got fractional shares, and the internet is a powerful research tool. And they feel like they've got everything they need in order to move on without the institutional investor.
Hey, Jim, it's a market. We can have an ethical point of view on all of this, but ultimately supply meets demand, and we have to clear a price. And that's financial markets for you. And at some point, someone's going to be holding on to the losses. Jim, I am worried about one thing at the moment, though. It's this kind of two sides issue to this conversation. I'm worried about the people that get stuck in the middle. When you look at some of the benchmarks right now, the Russell, just as an example, the number 2 holding in the Russell now is GameStop. Granted, it only makes up less than 1% of the index anyway. But I do wonder, Jim, whether people who are allocating to this market passively, and they're not part of this active conversation that we've been having over the last 3 days, whether they could be holding the bag also.
Yeah, I mean, there is that I've got worried about too. Not only is GameStop number 1 or number 2 in the Russell, but Plug Power is number 1, a stock that's gone from 7 to 70 over the last 6 months as well. So when people are told to buy small cap stocks, is one instance, because it represents return to value. Well, the leading the charge have been 2 of the raciest stocks that we have in Plug Power and GameStop in that index as well. And so this idea that you buy these passive indexes under these preconceived notions, that might not be holding right now. So even the passive investor that thinks that they're investing conservatively, thinks that they're avoiding this mess, they might not be avoiding this mess to some degree because it's infecting every aspect of the markets right now.
Jim, do me a favour, reach out to the team. Let's get you back on next week and let's continue this conversation. It's important. Jim Bianco there of Bianco Research. Thank you, sir. About 20 minutes away from the opening bell, equity futures